Hello, everyone, and welcome to the Warren Street Year-End Tax Planning webinar. I am Cary Facer. With me, Justin Rucci and Emily Balmages from our team are on this call with us. We are going to share with you some ideas to start planning for the year-end, the calendar year, tax planning ideas. And before we do so, some disclosures. If you need a copy of our ADV background information about our firm, you're welcome to request it. Or give us a call. We'll send you a copy. This is our team. Warren Street Wealth Advisors is an ensemble practice of 9 investment professionals and financial planners. And we work with just over about 350 families all throughout the country. Investment management, financial planning are 2 core services. But what we found ourselves doing a lot of lately is providing tax planning and specifically year-end planning. So we wanted to get ahead of this and share with you some easy ideas that we can help you implement before the year is over. And so to start, I'm going to ask Justin to join me and share with us a little bit about what's happening with 401ks. Justin, you with me?
Yes. Hi, Cary. Thank you. So to start, I will start with probably the easiest and lowest hanging fruit that comes up almost every year, which is maxing out your 401k contributions if you're able to do so. So there are new contribution limits for 2022. They have increased from last year. It is now 20,500 and an additional 6,500 if you are age 50 or older is a new IRS limit on 401k. So you can contribute up to that amount, not including any matching contributions from your company. So that is just your contributions. If you have not received your full match, or if you're not sure if you're getting your full match, that's something you definitely want to make sure you're getting as well. We can help you figure out the best way to make sure that you are setting your contributions up properly to get the full match from your company and not leaving any money on the table. Tax loss harvesting, this one's coming up more and more. So basically what tax loss harvesting is, it allows you to take advantage of market volatility and kind of make lemonade out of lemons. And so if you have market volatility, markets are down like they are in 2022, you can sell your securities at a loss, take that as a tax benefit, and then reinvest the proceeds elsewhere to offset either existing gains you might have already for the year or future gains that you're able to carry forward to future years if you need to. You can also use it to offset $3,000 of ordinary income if you don't have any other gains. This only applies to taxable accounts, so it does not apply to IRAs or retirement accounts. And it's especially useful, like I said, during times of market volatility like this year. It can lower the tax bill, and there's no downside to doing it in that you can carry forward whatever benefit you do for future years on an unlimited basis. Roth conversions is another one that we get a lot of questions about. And actually, this is another one that is especially applicable in years like this. So Roth conversions in general are very case-by-case specific, but in years where the market is down, it presents an opportunity to convert to Roth, doing so on a lower account value, therefore paying a lower amount of tax. If and when the market eventually rebounds, if those dollars are now Roth dollars, they will rebound and grow tax-free. So you get the benefit of paying less tax on the conversion, but also the rebound is now treated as Roth instead of pre-tax. This makes the most sense if you have cash to pay the tax, so you don't have to withhold from the IRA. You have some cash on the side, and maybe you're in a lower tax bracket this year than you would be otherwise, or similar. So definitely something to run by us before you take any action, but could be applicable, especially in 2022. This one is in relation to anyone who's self-employed or maybe has a side business that they do. So creating a entity or an LLC is the most common, is something that you might want to do prior to the end of the calendar year, depending again on your business, how much you're generating, and some of the specifics to whether you need that protection or whether you maybe need some tax benefits that might come with a entity formation. So something to talk to your tax professional, us, your lawyer about. But if you're looking to set up an entity, that might be something you want to do before the end of the year. Common question we get in regards to entity setup is, if I set up an LLC, is that the same as an S Corp, or how does that work? So this is technically 2 separate things. So LLC is just the entity itself. So you could set up an LLC and have it be totally unrelated and just have it as basically a pass-through entity, meaning all income just flows through to your personal tax return. The benefit in that case is usually it provides some type of shield where your business and your personal assets are separated. You can also have an LLC taxed as an S Corp. So you can almost combine these two things. Whether or not that makes sense to you will depend, or for you, depends on your income, your other taxable income and tax status. So something worth discussing with your tax professional once again. But the quick answer to this is LLC is just the entity. The S Corp can be applied to that entity if it makes sense for tax classification purposes. Now I'm going to pass it to Emily, and she's going to talk about charitable giving and gifting and some of the annual items in relation to that.
Hi, everybody. With regard to charitable giving, for taxpayers who give to charity, there are some strategies to optimize the tax benefits associated with charitable giving. Since the standard deductions increased in 2018, many taxpayers no longer itemize and therefore aren't getting to take advantage of the charitable deduction. One workaround to this is to batch your charitable contributions into a single year. For example, if you have a favorite charity, let's say you give them $5,000 annually, you could batch 3 years worth of your donations, a $15,000 contribution to them, covering 3 years, and hopefully exceed those deduction thresholds and be able to get a tax benefit for your charitable donation. Another strategy is something called a donor advised fund. These funds work well when a taxpayer has highly appreciated securities or stocks. The donor advised fund allows you to donate those securities or stocks, avoid the capital gains tax, and then gift out cash to your charities in the normal manner. This is something Warren Street could help you set up and facilitate the right securities to donate. Gift tax law allows for gifting of $16,000 per person annually without requirements to report the gift. These gifts need to be completed prior to the end of the year. That amount is doubled for married couples, both as the givers and as the recipients. I-bonds can be purchased through the Treasury Direct website. I-bonds are savings bonds that earn interest based on combining a fixed rate and an inflation rate. These purchases are limited to $10,000 per person per calendar year. So if you did want to buy a 2022 I-bond, the clock is ticking to get that done before the end of the year. The current rate is 9.62%, which is exceptionally high. Those rates adjust every 6 months. That current rate is good through October 2022. So if you did want to take advantage of that higher rate, you should make the purchase prior to October 2022. I'm going to turn it over to Cary now for our conclusion and some information about Warren Street.
Yeah, thank you, Emily, and thank you, Justin. Obviously, these are just a few of the things we wanted to share with you. There's a lot more than this, but to cover the entire tax code in a 10-minute call would prove difficult. So we wanted to just share with you a few things that we've been thinking about and doing for our clients. If you're not a client and you want to become a client, real simple engagement, just schedule an established call. That could be with myself and even Emily, and we'll give information later on how to do that. If you wanted to move forward, we just provide you a letter. We go through a full discovery meeting, and then if we need to open up new accounts, we will, and then finally come up with the solutions from the financial plan that we build for our clients. Our planning process, so once you're a client, if you're an existing client and you've been working with us and you needed some information about what we just shared, we just schedule a review, go through your plan, come up with some solutions, implement those solutions, and obviously what we're talking about today, a lot of these are time sensitive prior to the end of the year or filing your tax return, and then of course monitor and adapt, keeping up on things. For new clients who aren't familiar with how we invest, we do manage portfolios in-house here at Warren Street, based of 3 core portfolios of stocks, bonds, and diversifiers. We then blend those for our clients. And the important thing that new clients ask is, do we have a feel for what's going on in the market? And then how do we make adjustments? And we have full discretion on about 98% of the assets we manage for our clients. So we make those trades all at the same time, and no preference on account size or client treatment there. And so we're able to do that, and it's just through our trading tools and technology, really. But something that's really neat for a smaller firm like ours of 9 people serving over 300 families. The fees. So if you ever attend one of these or you meet with an advisor and they can't explain to you what their fees are, it's usually a bad sign. So we like to hold these out. We do have minimums here. We've grown a lot. Thank you to our clients and the referrals that you provided. And so this number has continued to climb over the years. So some of you may be seeing this and have not been updated in a while, but the numbers higher. But don't worry, if you're a client of ours, we're not going to ask you to go anywhere if you don't meet these minimums. But this is for new clients. 500,000 in investable assets is a minimum. And if you don't have assets to manage yet, which is common, some of the things we talked about, entity formation, you may be a new saver or just starting a successful business and you're kind of getting to that threshold to where you need planning and tax advice. We understand that. And so what we can do is provide a custom quote and you can have us just create a plan for you, not subject to investments. And so it's real common to see we'll actually charge a separate fee just for a financial plan until you get to those numbers of 500,000 or more. And then those planning fees will be waived because what we provide at Warren Street is planning and investments. And our ideal client is someone who values the integration of both. If you do meet the minimum of 500,000, there's our schedule on the right, 500,000, 1.25%. It's a tiered schedule, so the next 500 receives a discount, next million discount, next 3, 5, etc. And then if you are referred as part of our friends and family referral, you would receive a flat 1% on the first million as noted in the bottom. This, we're going to go to questions, so we'll take time for questions here. But before we do, we just want to wrap up and source some of the information that we presented here today. And if you do want to get a hold of us, it's really easy. You can go to our website, warrenstreetwealth.com, and go to our schedule page, and you can book a free complimentary consultation with one of our advisors here on the team. You're welcome to reach out. We do have live team members to answer that call. So if you do call, just let them know you listened in to this video and you would like to schedule a call with an advisor, and they'll ask you a few questions to get the right person on the phone with you. And finally, you can just shoot us an email. Well, that is it. I just want to thank everybody for attending. We hope this was helpful. If you have any questions, please feel free to reach out to us. Have a great day, everyone. We'll talk to you soon. Bye-bye.